On April 2, President Donald Trump has announced sweeping tariffs from the White House Rose Garden, a 10% baseline on all U.S. imports, with 34% on China, 20% on the European Union, 24% on Japan, and 25% on India. Branded Liberation Day to cut a $1.2 trillion trade deficit, this decision, and the world's fierce reaction, echoes the 1930s Great Depression. Are we witnessing the spark of Great Depression 2.0? Let's rewind to 1930. The Smoot-Hawley Tariff Act raised U.S. duties on 20,000 goods to an average of 20%. Signed by President Herbert Hoover amid a stock market crash, down 33% in 1929, it aimed to shield American jobs. Instead, it backfired. Canada slapped 30% tariffs on U.S. eggs and tobacco. Europe retaliated with duties on U.S. cars and wheat. Global trade imploded, dropping 66% from $36 billion in 1929 to $12 billion by 1934, per the U.S. State Department. Exports like U.S. cotton fell 70%. Unemployment soared to 25%. Banks failed, 8,800 by 1933, and GDP shrank 15%, a $1.2 trillion loss in today's dollars. A protectionist gamble turned into a global catastrophe. Fast forward to 2025. Trump's tariffs, averaging 22%, the highest since 1910 per Fitch Ratings, hit $3.1 trillion in U.S. imports. China retaliates with 34% duties on U.S. goods and bans 7 rare earths, 90% of global supply. The EU targets 18 billion euros in U.S. exports. India, facing a 25% levy on its 83 billion U.S. trade, hits back with 30% tariffs on $10 billion in American soy and aircraft parts. Canada imposes 25% duties on $30 billion. Markets tank. The S&P 500 falls 4.8%, its worst since 2020. The Nasdaq drops 6%, and oil crashes 8%. Sound familiar? The 1930s playbook is repeating. Then, a stock crash preceded tariffs. Now, markets were wobbly, down 5% in Q1 2025 before Trump's move. Smoot-Hawley's retaliation slashed trade. Today, the Tax Foundation predicts a $2,100 hit per U.S. household, having 2025 growth to 1%. China's soybean tariffs erase $13.4 billion in U.S. exports, mirroring 1930s cotton losses. India's 500,000 textile jobs teeter, per its Commerce Ministry, as Canada's duties gut Texas's $20 billion Mexico trade. The IMF warns of a 3% global GDP drop, $3 trillion, matching the 1930s 15% collapse in scale. Trump's tariffs weaponize economics, but reactions amplify the damage. In 1930, Europe's counter-duties killed U.S. auto exports, down 60%. Now, Stellantis plans 2,000 layoffs as EU tariffs bite. China's rare earth ban could spike iPhone costs to $2,300, says Rosenblatt, echoing 1930s price surges. Bread hit 9 cents from 5. India's $160 billion economy braces for a 1.2% GDP cut per Goldman Sachs as U.S. investment, $60 billion since 2020, falters. Unemployment ticked up 0.3% in a March 2025. A 1930s-style 25% looms if trade craters. The Great Depression wasn't just tariffs, it was debt and panic. Today's $318 trillion global debt, per Reuters, dwarfs 1930s levels. Banks then failed en masse. Now, regional U.S. banks report 10% deposit drops since January. Inflation, at 3.5%, could hit 5% per Moody's, as supply chains, already fragile from COVID and Ukraine, snap. Thailand's GDP faces a 1% loss. Germany's 0.8%. Developing nations, like 1930s farmers, bear the brunt. By April 4th, Trump's team claims tariffs will save America, but history screams otherwise. Smoot-Hawley ignited a depression. Trump's 2025 gamble, met with global tit-for-tat, has lit the fuse for Great Depression 2.0. Trades collapsing, jobs are vanishing, and markets are cracking. Without a retreat, the 1930s ghost isn't just knocking, it's breaking down the door.